Welcome back to Growing Quality. My name is Elian and I look for stocks which are increasing their moats. Now, in this video, we will go over this week to see what has happened, but we will start actually at last week because last Friday there was some changes made to the S&P 500. So we will see what changed there. Then we will have a look at Tesla because there was a bunch of news coming out regarding the company. Some incentives, there was manipulation of the factory in Germany. Then we also have KWEB, the Chinese internet ETF. It was actually up last week, following earnings of JD. So we will check out how the ETF is doing now. And finally, there has been a bunch of earnings. Costco, for example, reported earnings. We will see what happened there. And to close off, I have an announcement to make. I think it's a very fun announcement. And if you stick around to the end, you will find out what it is. And hopefully, you like it as well. So let's start off with SMCI. We can see that last year, around May, the company got a first initial bump in share price. This was right around when Nvidia started the AI hype, and SMCI took full advantage of it. Now we can see that from August till December and even the start of 2024, the share price has been consolidating between around $320 and $240. And then in the beginning of this year, something incredible happened because the share price suddenly exploded. Since the beginning of 2024, we can see that the share price has more than tripled. Now, if we look at SMCI's revenues, we can also see that they have been growing quite impressively over the last year. I mean, revenues are up 100%, and over the last 5 years, revenues have gained 30% on average. This is rather impressive, and if we look at the EPS numbers, we can see that this has exploded as well. Over the last 5 years, EPS has grown at an average of 70%. And we can also really see that around the beginning of 2022, EPS numbers has suddenly started increasing a lot. Now, if we take a look at the chart of Palantir, we can see that they got a boost in May as Nvidia started the AI hype because Palantir, well, basically all they do is AI. Now, this chart does not take in consideration Thursday because yesterday they had a big contract announcement and the share price went even higher. But this is where we start to see some divergence from SMCI because Palantir has been growing revenues at 18% over the last 2 years, and Palantir revenue growth has been speeding up. I mean, we can still look at the metric, it still says 18.5% over the last 2 years and 19.6% over the last year. Now, I'm not saying this is not fast growth because it is, and according to the CEO, they cannot keep up with demand. So this is very positive, of course, but SMCI did have faster growth. Now, also, when we look at the EPS numbers, this is kind of interesting because we can see that EPS numbers are actually not growing that fast. I mean, last quarter, Palantir had GAAP EPS of 4 cents. They had adjusted EPS of 8 cents, and a lot of it came from interest income. Now, I'm not saying this is not a good move. I really like the fact that they have over 3 billion in cash and they use it to their advantage. That's a good move. They have no debt, so why not use their cash? But SMCI had a way higher EPS number. So when we look at it this way, it kind of makes sense that SMCI got added to the S&P 500 instead of Palantir. So then let's take a look at Tesla because out of the Magnificent Seven, Tesla is the only stock that is down year to date and it's down quite a bit. As we see the news articles, we can kind of figure out why. Tesla continues its incentives on Model 3s and Model Ys, which are on inventory in China, because according to data from China's passenger car associations, shipments from Giga Shanghai were down about 19% year over year. Now, these were not the only incentives announced, however, because in the US, Tesla announced to give 5,000 miles worth of supercharging in order to boost sales. And then on Tuesday, news broke that production at Giga Germany was halted after a group set fire to one of the main power lines for the factory. Now, this is quite bad news in and of itself, but what's even worse is that production has now been announced to be shut down all the way through the end of next week. So when we look at the chart of KWEB, the Chinese Internet ETF, we can see that it has been trading sideways, basically range bound for the last 2 years. Chinese stocks fall out of favor as China was mostly shut down due to the zero COVID policy, and the stocks haven't recovered since. This is also reason for plenty of traders to seek value in Chinese stocks as they find them heavily undervalued. But in my opinion, these Chinese stocks rely on foreign investment, so you have to get the institutional players standing behind you. And recent news articles have suggested that fund managers don't know how to get all their money out fast enough of Chinese stocks. This means that these stocks will likely keep falling in the foreseeable future, and we will have to wait for a turnaround. So that brings us to Costco, which reported earnings on Thursday. Now, the stock did miss on revenue numbers, but did beat on the bottom line. And this was for a large part due to a tax benefit. This tax benefit contributed to 21 cents of EPS, which accounted for a large part of the beat. But still, when we take this tax benefit off, the company still managed to beat EPS numbers. However, the stock is still 4% down on the report as the company missed revenues, and trading at a 52 PE ratio makes expectations kind of high. And having growth in the single digits might be a bit low for such expectations. Now, that brings us to the last news article of the week. Rivian launched a new model, the Rivian R2. In this picture, it's seen as the most left, and I think it looks good. It's just a smaller version of the R1. Now, production is set to start in 2026, and this announcement came with the surprise of the R3. It's even a smaller SUV, but I think it looks amazing. I think it looks very fun. The big round headlights give me the idea of a baby face, which makes it really cute. I have to say, I really like it. Now, if you came this far in the video, I want to thank you. And I want to let you know that I created a YouTube portfolio. Because what is a finance channel without showing how they invest? Now, this portfolio is just a small portfolio. It has the goal to mimic the normal everyday investor. And as such, I DCA $125 into it every week. Of course, this is just a small portfolio, and it starts out as a really small portfolio. But it gives a good idea of how I would invest it. And this means that in the beginning I will go a bit wide, but I will narrow it down and get more concentrated as opportunities present itself. So let's look at what I did so far. So what I have done so far is bought these 7 stocks. I put 20% into PayPal, 20% into Ferrari, unveils and Monday.com both got 15%, and the other 30% was split between Moody's, S&P Global, and Rivian. Now, in future videos, I will break down every investment and my thesis around it. But for today, I will just go over what I did. So these have been the first 7 picks of my investment portfolio. Now, all these 7 stocks were picked for a reason, and in later videos, I will go into the theses of all of these stocks. But first, let me explain to you why my portfolio has been constructed in this way, without giving you every investment thesis. So in this portfolio, we have 2 turnaround plays. These are PayPal and unveils. PayPal, in my opinion, is heavily undervalued. Unveils is also a turnaround play, as I think they are highly influenced by interest rates. Now, then we have 2 very stable factors, which are Moody's and S&P Global, and together they make up 20% of this portfolio. They share some characteristics, but are also quite different to one another, but they are trading very related. Now then finally, you might see that I have 2 car companies in my portfolio. However, one is a car company and the other, well, it is a car company, but it's not valued as one. Ferrari is valued as a luxury play, and that's something I very much like. As for Rivian and for Monday, these are my more speculative plays. Monday is still a very small company with a market cap of around 10 billion, and revenue is still losing money, which they will have to fix in the future. Now, they are suggesting that they will start making money at the end of 2024. So I will be seeing how that goes and will adjust this position accordingly.